Alright boys, yeah, look, we're getting a bigger pullback here in the euro post the miss on the CPI on Friday than I expected. I thought, we'd get some support around 118.30. Haven't got that yet. Now if it continues to go lower, I might have to reconsider how bullish the euro is, given my general thesis this month is looking to buy the euro ahead of the ECB meeting and full move back towards 120ish into that, and very similar, buying euro yen on the dips is the trade that I had running as well for a while now, and it was doing a lot better than currently too. So the market is an interesting spot here. Stocks at all-time highs. Dollar yen can't get support and the euro is lagging, and usually it's not like that. Usually it's the euro going up, dollar yen going down. Both moving at the same time does accelerate the euro yen losses. This move is pretty aggressive and it's sort of breaking the uptrend, and so it's getting to that point where you got to reconsider what you're doing, right? You got to reconsider the trades that you're in, and the main thesis that you have. You don't want to get stop in the same trade. If you're really strong over, you can buy more, but usually when you're wrong to the point that you're getting stopped out, you should check the trade idea and wait for at least strength to come back into the market before you start to buy again. You can save yourself a lot of money by not fighting the market or just getting back into tune or the same sync as the market, because if the euro is not going to be strong this month, then I could lose a lot of money. This is turning out quite more bearish than I expected. Now I did get a fair bit of the rally on the way up, so it's not like I'm losing too much here, but it is interesting that the market's rolled over here and hasn't really continued higher, considering that the US dollar hasn't really been strong at all. You can tell that by the rallies in gold, you can tell that by the rallies in the Aussie, and maybe a better way of playing general US dollar weakness is to be long the pound, which has that nice Brexit story, which could get some really good news today. May's meeting, having a dinner with EU leaders, and if that gets to the point where they make a breakthrough, you saw how aggressive the price action was last week when you saw that rumor of EU willing to accept the 2-year extension. Now, that's just a rumor, and the market just reversed sharply, but it comes at a time when the market was in a little bit of profit taking downside, has its first real sell-off since the relief, and now straight up higher. So yeah, the pound with the CPI numbers and Carney speaking has multiple options to go higher and for the market to focus on the Bank of England raising rates. The euro is struggling from euro pound selling, struggling from euro Aussie selling. Euro is getting hit nearly everywhere, right? It's really got almost no love in the market at the moment, even though it's got that nice fundamental story behind it. So luckily I didn't enter too high here on the euro. I did wait for the pullbacks, but it's not working out very well. So if I do get stopped out, I'll sit to the side for a little bit, wait for the market to show me some bullish price action, and then hop back in, with that same thesis. If that's the case, if the market continues lower, then I have to step to the side and continue not to buy, right? Be really patient and just adjust my thinking as to what it is. Perhaps it is the fact that European yields, particularly German yields, aren't rallying higher as you would expect into a major policy shift like the ECB. They're still very well contained, and in fact the 2-year yield difference between the US and Germany is getting larger, and that's a really big effect of lowering the euro. And the Japanese election has made it harder for you to be aggressive on the long side here, and Japanese elections are a bit closer than expected, and dollar yen struggling with that weak US dollar tinge, and the euro yen struggling with that weak euro tinge. So it's all about those yields really at the end of the day, and maybe Japanese elections will put a hold on it. Abe wins, perhaps we can play the same trade next week, and we might be a little early to this euro trade. But the ability to to take losses is very important in trading. You want to develop that pretty early. Now the main trade I was doing today, because these trades are from last week, is long the oil. Now oil has got so many, apart from relatively nice bullish action anyway, the stories over the weekend that were quite aggressive here is the Iraqi's army is moving north towards Kurd territory to take back the oil fields. Kurds have said basically, that this is not part of the negotiations. They had independence vote, yada yada. It will just take a small spark for that the powder keg to blow up. And there's heaps of Kurdish fighters that have been fighting ISIS that would come back to protect the motherland. Kurdistan, which they were trying to create. Iran and Turkey do not want Kurdistan, do not want Kurds to have their own territory. And so Iraq is basically saying, all these terrorists, the PKK, which is like the Turkish Kurds terrorist group, moving into Kirkuk, and and basically rhetoric's building up, right? Now taking back oil from the Kurds is their main source of revenue, and so this is do or die moments for them. On the back of that, in Iran, you have the Trump talking very tough against Iran, talking about not ratifying that nuclear deal, letting Congress have to make the ratify it in the next 60 days. The rest of the world's not on the same path there. So that really tough talk from Trump here is putting them on watch. The latest there is that Mnuchin, the Treasury Secretary, is going to put sanctions on the Revolutionary Guard. Last week, the Revolutionary Guard suggested if they did that, that's like, that's for them unworkable. So how this Iran situation develops, and it looks pretty negative, and how to the point where sanctions come back on, and they can't get access to the oil market, there's a problem, and how the Turkish, the Kurd, Iraqi situation develops, is supporting this oil move higher. And so buying oil is pretty clear here in the short term, just before everything kicks off, just expecting something to kick off. If you're selling oil, you're really hoping that nothing bad happens further. And from these prices it can drop down, but there's a lot of room to move higher, just in the short term anyway. Oil doesn't muck around when it moves. Up to 55 is really on the cards quite quickly. So that's a trade that I talked a lot about to clients today, and we got in pretty early before the rally, which started at the start of the European session. You saw this nice little 50-point move, and that could just be the beginning, because like I said, both these situations like to get worse before they get better. Unlikely that that it's just going to disappear. Look, there's in terms of support on the dollar yen, it's probably fairly solid in the next 100 pips. It doesn't seem to be the preferred way of playing a yen cross, right? But 111.60 to 111.30 is pretty solid support previously, and you can sort of, I don't know, lead in that the US dollars should be outperforming the yen. The problem with some of these trades is that the yen is a pretty crowded short, so a lot of people have already sold the short, and stocks are already at record highs, and it's not pushing higher, and it's not gaining easily. That's a danger sign. Euro yen going down is also a danger sign. So there's a few things that are setting off my danger radar here on some of these yen trades, and I trade yen more successfully than I trade nearly any other product. So for me not to be endorsing a buy dollar yen situation when the Fed's raising rates and stocks at all-time highs is sort of an indictment that I'm not buying, but I'm definitely not selling. I'm waiting to buy still, and just seeing how it develops. It's developing very negative. Probably can't. The rally here, I thought, okay, maybe the US sell-off is with the dollar yen sell-off is found some support, but straight into Europe just got more heavy selling. So we'll see. I'm still open to buying euro yen, dollar yen from these levels, of course. Those fresh lows, but I need to see some sort of sign that the market is bottomed and that the buying is coming back in, which you're getting a little bit now. You're getting a little bit of euro yen buying coming through. Ooh. Still a lot of work to do. So here, if you're not in dollar yen, you want to see dollar yen straight back above 112. Yeah, and then if tomorrow we're above 112, we can get a little bit more aggressive here in looking at the euro yen perhaps, or the pound yen. The pound yen's sort of sideways here. It doesn't usually stay sideways for too long. So the potential for it to resume its uptrend is very strong. Potential for this is interesting. I mean, pound yen's one way of playing pound more, but yeah, there's danger signs in just the whole yen complex at the moment that you have to be aware of. I really wouldn't touch the Aussie up here. This is mostly US dollar weakness that's driven this, and the support being found at 77.50. The story behind the Aussie is not there at the moment, not from the RBA anyway, not from the fundamental, not from our data, and not from China or commodities. So there isn't that support there. The pair which has got the most potential to rally, I suppose, at this point is the Kiwi dollar, but the Kiwi dollar is still got that political uncertainty, which might be days away from getting a solution. So while we've had a little bit of a relief rally so far, you're probably going to need that catalyst or resolution there, and there's still a very real chance that that Labour wins, and that's a negative result. That's sub 70 cents probably in the next week, if that was to be the case. So that leaves, what do you have left? That generally when oil's going up, you want to be buying dollar CAD, and you saw some crazy price action in the dollar CAD lately, right? That's really negative on Friday. Yeah, market has that weak CPI number, then CAD just goes straight back up. Then you come in today, oil's super strong, multi-month highs, and dollar CAD's just getting wrecked here. And dollar CAD has been really noticeably underperforming. So while traders are looking at this saying there must be some flow in the background, there must be, for this to be going higher at the moment, there must be a merger and acquisition, real money going through. That's nothing to do with speculating, which could be the case. We might find out about a big purchase one way or the other, but the price action is terrible, so there's no way you can sell. When something's not right, it's like the euro. Something's not right here. You gotta be open to the idea. Perhaps the US dollar's got enough wind for a second run. But let's have a look at some of the bank reports, see what they have to say on this whole subject, because it is a very fluid and interesting market here. I rarely don't have a strong view, or I'm rarely this perplexed by price action, and right now I'm like, wow, where's the euro going? Like, and where's the dollar CAD going? Apart from where it looks like on the charts, US dollar stronger, it's the sustainability of those moves doesn't make too much sense to me in my paradigm, right? The way I view the market is what's been happening for the last few years. And usually what you do then is you just sit to the sideline, right? Wait until you're synced in, wait until you can feel the market, and what you feel happens. No need to trade, no need to fight. Alright, let's have a look at the early morning read. This is a macro catch up from over the weekend. See if we missed anything. There was some talk of some political issues in Europe. Didn't seem like there was that big a deal though, causing that sort of something. So these US treasuries that we watch all the time, they're back below 2.3. So that would indicate, dollar yen going down. But while the euro is under pressure here, is mostly because of German bonds. We'll have a look at that. A little bit of education. So the German 2-year, how close is it for them to be raising, you know, rates? Still cool, very negative. The German 10-year, let's have a look at them. So look at these 2-year rates, they keep on dropping, right? And it hasn't been any. This is literally the reason for the euro to fall. So something's up here in the bond markets, and it's messing with our trades. These are supposed to be going up. We're supposed to have a bubble in bonds. When bonds have a bubble, so the bonds itself is going high. At the moment, it's going higher again, and it's supposed to be going down. Bonds are supposed to be going down, yields are supposed to be going up. This does not look like the chart of a bank that's about to start tapering. So this is the main reason why you have euro falling. It's the difference between the 2-year and the 2-year German bonds and 2-year US bonds. And it's always bonds. When shit's weird, it's always bonds. It's 190. So if that does a chart of that, probably not. Anyway, so yeah, it's noticeable, and it's talked about a little bit in trader circles as a reason for this euro underperformance. Probably unsustainable though, so I'm just at this point hoping not to get stopped out. I think if it goes much lower, I just have to sit to the sidelines and see how it goes. But yeah, weird. So guys, a little bit lower. We've got a lot of CPI data coming out this week. You've got the UK CPI tomorrow. You've got the New Zealand CPI on tomorrow morning as well. New Zealand CPI is quarter on quarter. That's a lot more important than the pound CPI. Remember the New Zealand CPI was terrible last quarter. So we'll see if it pops back. You've got Carney speaking tomorrow as well. And he's has to speak about inflation being high. What's Draghi speaking about? Yeah, Draghi's speaking Wednesday. Opening remarks though, probably nothing Q&A wise. And then Aussie jobs and Chinese GDP is pretty big for the Asian session Thursday. Pound retail sales finishes up, and then Yellen speaking right on the end. Speaking after the market closes on Saturday about monetary policy. So that's interesting. Not too much data, but some important data in the data that is coming out. Yellen was speaking already last weekend as well, on Sunday, talking about the inflation being temporary still, sticking to the main line that she expects it to pick up in coming months, adding that wage inflation was encouraging. Not sure if they talk about that here, but that's interesting, right? That's very hawkish. I mean, that just really cements that December's coming. So In terms of QE getting an extension further along the lines, that's probably why the 2 years falling. So what they're talking about is reducing the bond buying by more, but extending the duration. So a little bit like lower for longer, like the US did. That has the effect of keeping the short-term yields lower, and that has the effect of keeping the euro lower because of the way that the euro is correlated with 2-year yields against the US, not so much the 10-year, which is a bigger thing for dollar yen. So yeah, keeping the short-term interest rates lower will have the effect of keeping the euro subdued, and maybe that's literally the reason why they're floating this idea. So a sharp reduction to 30 billion. Carney was talking raising rates, yada yada. Pretty much, I think the pound is mostly waiting here for that Brexit breakthrough. Once we get that Brexit breakthrough, we can get that nice move towards 140. Which should come quickly, right? It should come pretty quickly within a couple of weeks of the Brexit breakthrough. At this stage, the Brexit breakthrough is just that the European Union agrees to the 2-year extension of UK's access to the single market under pretty much same rules, giving business an ability to plan. Yeah. So yeah, Charis Trader. That's the reason. You know, why the euro is lower than it should be or could have been. It's not should be really. It's a bad word to say. That's the reason for what is happening. So there's usually always a reason. If it's not obvious, it's usually bond market reacting to the ECB's overtures of keeping QE in place all the way to 2019. Which makes for a very boring market, guys. This will keep volatility very low. Alright, this will keep euro in a range trading pattern probably. Maybe slight upside bias, but not the aggressive upside bias that you get from the taper ending. Because once the taper ends, you can start to get the market pricing in rate hikes, and that's where you get the bigger moves. Yeah, so Merkel not having a great election is something as well, I suppose, but nothing there. So this meeting tonight between May and Chief Negotiator, she said something was released at the start of the UK session here, something along the lines of, you know, it's time for a breakthrough. So it's pound's really in play today. Keep an eye on this euro, see if the rally fails again. If it continues, if it gets back underneath, you know, 117.90, I might just cut it and I'll get stopped out. Just have a look quickly on the technicals, haven't checked them for a while. These are pretty broad. Yeah, look, if we break 116.60, we're going lower. Yeah, above 120.90, we're going higher. Jesus. Thanks for that. Okay, pound Z reaches 50%. Okay. Very neutral. So you can see that the cloud's still pretty far away here. The Tsuchimiki cloud's much more important for Japanese traders who do a lot of the flow. So we've still got a little bit of room. 200-day moving average has been broken though. So if we don't get back above the 200-day and close back above it, which would be nice. Sorry, it's been tested, it hasn't been broken. Then we can I don't know, start to look a little bit more constructive. But I think for both of these pairs, the euro and the dollar yen, if you're playing them from the bullish side and you like euro yen, just got to be a little bit more patient. Trades which make sense to me are something like a long euro Aussie here. That beast was in a strong uptrend, and looking for the price action to change. I mean, that was a pretty aggressive sell last Friday. Even in Asia today, that was pretty impressive by the Aussie. But you probably have to pay a little bit of care here too, right? Because if the euro continues to underperform, the market's a little bit long, the euro. And if the market's wrong, then the potential for a clean out to that 116.20 level is pretty clear that could happen. And the type of selling we're getting is that grindy type of selling. That's a dangerous sort of sell for the euro. So yeah, patience. You know, for me, there's no reason to jump into anything apart from keeping an eye on the pound. The pound is probably the best bet at the moment, if you suspect there's going to be a breakthrough sooner rather than later this week on the Brexit. I don't think May's going there for no reason. Alright. So basically his rant here is that there's going to be a recession coming in the US led by debt. But it is Trump who wants to go that way. So the tax cuts, while the stimulatory is you know, this is also another phenomena basically in the market right now. The stock market rally is just unbelievable. And it's really hard to pick the top in this. VIX is all-time lows, doing you know, breaking records left, right, and center. And this rally is it's got to be near breaking records too. In terms of the ability to rally after a significant rally and then kick higher, daily. It's you know, this doesn't usually end well, right? We've been watching this rally for the last 6 years. You know, there's always these corrections, these mini corrections, and these are 10% or 5 to 10% corrections, and we just haven't had one. We just haven't had one. It's parabolic. This is a Bitcoin chart going on here. So yeah, there will be a pullback. What the catalyst is, what can get the market to sell is hard to know, and the timing of it's key. Because you want to be selling dollar yen or out of any euro yen, pound yen, anything like that. In that scenario, you want to be long gold in that scenario. But yeah, right now, in terms of update for the Fed chair, it should be announced in the next month is the latest. So it's not coming in the next week. Should be coming the next month, and should be around mid-October from what we say. Sorry, not mid-October, early mid-November. They're still doing first round of interviews. It's an interesting article. We'll look at this tomorrow night. Alright. But yeah, for today I'm going to be a bit cautious here in the market. It's proving a little tough. Proving no follow through here on the euro, leading to a bit of skepticism. Dollar yen edging lower. Pound having a little pause, but big news on the horizon. Oh yeah, the Brexit news. Yeah, the thing you're looking for is any sort of agreement on the Brexit bill is huge. Probably not going to get that though. Any sort of movement forward of the negotiations past that, and the acceptance from the EU in principle of 2-year extension that May's after, that's super bullish. Yeah, that's where you get sharp moves. Like this rally last week was on nothing. So, and then add to that strong inflation and Bank of England raising rates, then that's the sort of the combination that can get the market extremely strong. You know, we may end up selling some euro pound if the euro continues to be so laggard. If Draghi's stumbled upon the perfect recipe to keep the euro lower for longer, then we have to look at options to how to buy the pound. And selling euro pounds is definitely one of the safer ways. Takes out the US dollar concerns. Alright, I'll be back tomorrow guys, same time. Hopefully we've got a little bit more colour, a little bit more information that makes sense. But yeah, if euro and the dollar yen are both lower tomorrow, I think it's fair to say that we'll be in the sidelines. If it starts to show some strength, then we can talk about the market resuming a bit more of the medium-term outlook trends. Other than that, guys, if you have any other crosses, please PM me. Keep an eye on oil later. If you're long oil, keep an eye on the reaction in the start of the US session. That's where the biggest moves happen. And also just any headlines regarding fighting kicking off in Kurdish and with the Kurds, or sanctions on Iran, which probably aren't going to happen today. Minchin was talking over the weekend about that's what's coming, sanctions on the Revolutionary Guard. So that will be a story when those break. Alright guys, trade safe.